Hello and welcome to all our viewers on CFO Insights. I'm Sherry, a financial technology consultant at Hyperbots, and I'm very excited to have John Silverstein here with me, who is a seasoned finance executive with over 2 decades of experience in leadership roles with expertise across both Fortune 500 companies and high growth startups. Thank you so much for joining us today, John. Let's dive into some concepts of establishing local offices for managing tax compliance across various states. And my first question to you for that would be, what is the primary motivation for companies to establish local offices in multiple states for tax compliance?
Yeah, the main motivation, it's kind of archaic in some ways too, and the states are changing pretty drastically since 2018 is when the Wayfair case is commonly known that took place on where your presence and nexus needs to be. And it's not just on physical anymore, but the main motivation is to be compliant with each state's tax regulations and requirements. Tax laws, they vary significantly state to state. So if you're in one state, it's hard to understand how it varies in every other state or even county for income tax, property taxes, sales taxes. By having local offices, then you understand those nuances closely and you can swiftly change through the regulatory changes. That is starting to shift, and we'll go into that a little bit more shortly. But the or if you're selling, it goes back to when tangible goods were the main focus of companies, and you didn't have SaaS and all the global, you can sell things to anywhere at this point with shipping and all the infrastructure that's been set up. So companies selling tangible goods may need to collect and remit different sales tax rates depending on the state and even county. A local office, they can help ensure accurate sales tax handlings, which can be especially complex in states with the high variability in tax rates, such as like California.
And how do local offices help companies manage their nexus obligations for sales tax?
Yeah, number one, the nexus going back, like I just alluded to, is it used to be physical presence. So having a sufficient connection a business has to the state obligates the company to collect and remit the sales tax there. But establishing a local office creates that physical presence, which immediately triggers nexus requirements. So regardless of your amount of business you do in the area or location, you have to pay the sales tax. So it's important to make those decisions, understanding the nexus requirements, because you may already have a nexus, so it doesn't matter. But then if you have a physical presence, you definitely need to be sure that you are compliant with sales tax. One example is to consider a technology company that has like offices in Texas and California. If you have a local presence, they can stay updated in specific nexus laws in each state, such as with which digital services are taxable. So that's something that's challenging. Obviously, AI and technology and keeping up with the guidance and rulings in courts and things like that will allow you to keep a closer tie nowadays with what the tax laws and changes are happening on a regular basis or annual basis, where digital tax laws very different from state to state. You can keep on top of that through both technology and having a physical presence there. Then you know the laws, and if you have someone that specializes in that location.
And in your experience, what are some specific challenges you have seen companies face when managing tax compliance on a state by state basis?
It's really difficult to keep track. The US compliance state by state is probably the most challenging in the globe because of the nuances, and every good and every SKU, you could say, has potentially a different tax rate depending on where you're selling to and from. So like keeping the cost and complexity of maintaining consistent tax reporting while accommodating each state's unique regulations. Additionally, like staffing each office, it can be very expensive, resource intensive. It's not necessarily feasible for every company to do. And generally, when it comes to these tech companies and things, you have your hubs and things like that. So it doesn't matter. You're operating from a state, you might be selling to a state and someone can find you on the web and things like that. So it's hard to keep up and understand that right away, you might have to register in almost every state for tax compliance because of you can instantly become a U.S. company versus a work in a specific state. A large retailer operating in 25 states, keeping up with the property tax laws, employment tax filings, timely local income tax payments. It creates a significant administrative burden to keep up with all the different taxes and tax laws. And failure to comply then results in penalties and making this challenge even more critical.
And how does having a local office help companies handle state tax audits or disputes more effectively?
Yeah, with the local office, working with the auditors and working with the state in dispute, it allows for quicker response and to handle those disputes that might happen or audit requests. So that's and work directly with the auditor if they come into the office and things like that. So it's a lot easier from that standpoint. Having a local team that understands the laws and may even have some knowledge and other relationships and things that can help with that process is very beneficial. A manufacturing company with facilities in Michigan and Illinois may face an audit in Illinois due to its complex inventory tax laws. A local office enables the company to address any of these questions from the Illinois tax authorities quickly. A remote team that can have the lack of knowledge and depth to really work with the local tax nuances that take place.
Can you also provide examples of how technology like ERP systems or AI can support compliance across multiple states?
This is critical today, and this goes back to it's hard not to operate in multiple states. It's hard to just you're not just buying and selling goods in a retail environment anymore, and particularly when you're in a tech company or SaaS company. So ERP systems that are integrated with these tax software, the tax software continues to get updated and has specialists in these localizations to understand what data, how to centralize the data, and then go through that data to understand the state operations and what it gives the finance team visibility into each state's tax obligations. AI can automate these tax calculations based on the history and information that's continuing to be updated, reporting and checking for errors based on the nexuses and your requirements and going through. It can really help out there. It can help you stay compliant and also keeping up with all the deadlines and things. Are you monthly, quarterly, or when's your actual filings? That can be nuanced as well. So technology is critical in keeping up with that. An example of this is a SaaS company that sells to customers across the US. Like I said, it's kind of hard to not do business in multi-state because particularly if you're like a SaaS company, because you're not going to limit yourself to one location. And AI-enabled tax software can automatically apply those appropriate sales tax rates for each state and local jurisdictions based on your location and the customer's location. If the customer's in New York and the software applies to New York's sales tax rules, streamlining compliance without needing a manual review for each transaction. It can also, on top of this, there's different forms and different types of nexuses that you might need to fill out. One of my clients recently in New York, for instance, doesn't necessarily have a nexus, but is obligated to collect sales tax because they didn't meet the requirements from an economic standpoint, but the vendors requiring a tax exempt certificate. So in order to do that, there's different forms that you have to fill out and application. You don't necessarily have to apply for the standard sales tax, but it might be a nexus from another state, or they might accept like Virginia.
And what alternatives do companies have if establishing a local office in every state is not feasible?
Yeah, and like I said, it's probably not feasible and there's few companies that would have presence in every state. So it can be very impractical to have local offices. Companies often partner with the local accounting firms or they have consultants that can handle the specific compliance questions and issues as they come up, or hopefully before they come up in a lot of cases. Another option is to use the cloud-based tax software the updates with the latest tax rules for each state, reducing the need for physical presence. It's important that you have your own view and you get reviews too of even if you're using software, because again, things change. There's new rules and regulations that come out on a regular basis, or new cases that sometimes happen, like the Wayfair case that changed everything in 2018. A mid-sized e-commerce company selling to all 50 states might use a tax software like Avalar or Vertex, which keeps track of each state's tax laws and provides real-time compliance support. It's all dependent on your data, though. So if you don't have your item list in SAP, whatever, or in QuickBooks or NetSuite or whatever you're using from an ERP basis, you might be calculating incorrectly still. So it's important that you also understand how to set up your new items and things and to be compliant, because Avalar and Vertex is just using the data that you're supplying end of the day. So you need to make sure that you have that review. What are the items? What are you actually selling? Is it a service? Is it SaaS, which can be a service? It depends on the definition by state. You might have to work with local CPAs in the key states where it's more complex and things like New York or Texas as well. You can handle the audits, address the complex local tax issues without having that physical office.
Thank you so much for sharing these insights, John, on managing tax compliance across states. It's clear from this conversation that while local offices bring value in compliance management, technology and partnerships also play a critical role in this complex landscape.
Absolutely. Thank you for having me.